Volatile commodity prices, currency swings, a liquidity crunch triggered by IL&FS, and political and regulatory uncertainty. Corporate India had a barrage of headwinds to deal with in the October to the December quarter. How will they shape up in terms of earnings for these companies? Darshan Mehta is standing by with the overview of what can be expected in quarter 3. Morning, Darshan.
Good morning. So basically, we'll just take you highlights of what happened in Q2. Q2 was rather weak for corporate India. If you're looking at the earnings that came out, pretty much the weakest in the last 5 quarters. Because if you're looking at it, you see the red line, and this is the number of weak earnings. So 16 out of the 50 were weak earnings. Majority were in line. So if you take a look at what happened in the last 5 quarters, Q2 was a weak earning that came in. Now, if you're looking at the trends, what happened in terms of even the EPS. The first quarter was 114.3, and this was only on account of a big loss in SBI. If this was not there, this would have been in excess of 120. Second quarter was weak, 121.4. And finally, what are we expecting as far as this quarter is concerned? So when we started third quarter, that is 1st of October, it was 135. When the earnings season ended, that is November 15th, that time it was 137. The current EPS estimate still remains at 138. So this time around, there is expectation that, after a weak Q2, Q3 will probably will be slightly on the better side. So that's the trend that we are seeing in as far as the Nifty is concerned. A couple of factors. First of all, take a look at crude and commodity, crude as well as currency. Those are the 2 important factors that we need to watch out for. If you're looking at crude actually managed to rally and then again move down to levels of 68. So crude on a YOY basis, will be much higher this time around, but on a quarter-on-quarter basis, it will be lower. So for companies which report a QOQ number like the oil and gas companies, they will benefit. Some of them will definitely benefit, but for input cost, there will be definitely an increase. And if you're looking at the currency, and these are all average prices that have moved from levels of 64 right up to 72. So even if you take a look at the recent correction that's come in, on an average basis, still from 70, it's gone up to 72. So the tailwinds for IT company and pharma company will still be there for certain of the companies. So that's something that we need to watch out for. Some of the common factors. First of all, monthly auto sales does indicate that there is been a big slowdown that is there. So the auto company will discuss in detail. Festive season was something that wasn't they will show growth, but nevertheless it wasn't as better as what was expected to be. And the third key trend that you need to watch out for the overall earning is that banks, corporate and PSU banks probably may outperform the NBFCs this time around.
Okay. So if we look at this sectorally, Darshan, which ones are better placed to report strong growths and which ones are likely to witness a slowdown? Yeah,
so basically let's divide it up among sectors. First one is the agri sector. UPL is the only one, but if you take a look at the entire sector as such, there were adverse climatic conditions in India, and that is something that will impact. So export players' focus will have a better edge this time around. UPL, I think LATAM did extremely well, and that is something that will benefit UPL. The second sector that we want to talk about is the automobile sector. You saw the monthly sales numbers that have come out, and it's been disappointing, and that will definitely impact. Discounts have been deeper, commodity prices have been higher. Auto Ank also will come out with weak set of numbers, because what you're seeing with the Class 8 truck sales that are coming in, lead and rubber prices have corrected. So watch out for some of the battery companies and tire companies which could probably outperform the mainstream auto and the Auto Ank companies. So that's the auto number for you. As far as aviation is concerned, there will be strength because of the holiday season, and ATF price cuts will definitely impact, and so operationally Jet this time around is expected to come out with, Indigo is expected to come out with a profit. Jet and SpiceJet, the losses may narrow this time. The other sector is basically the financials. We are seeing a pickup in bank loan growth. There is moderation in NPAs, lower credit costs, larger treasury gain. So that's something that will do well. Corporate facing banks again probably may outperform the retail facing banks. So ICICI as well as Axis Bank is something that you'll watch out for. Again, you'll watch out for IndusInd Bank and Yes Bank because of the NPA issue and how much IndusInd will report in trade today, the IL&FS exposure. And real estate slowdown may hurt the housing finance companies this time around. The next sector that we want to talk about is capital goods. Order book has been good. So the past order book is something that will drive execution, but this time around the order inflow has been weak. Interest costs remain a concern, which will actually go ahead and impact the working capital. Margins no doubt may improve on execution this time around. So that's capital goods. Cement, again, single digit volume growth this time around, lowers average selling prices, weak pricing power, so it will be a weak quarter for cement. Let's get up the next sector that we want to talk about, and that is the consumer focus. There will be moderation in the FMCG growth. No doubt the volume growth won't be in double digits. It will come down significantly. It will be festive season for paints. Paints probably will do well, and cigarette companies will do well. So that's the trend on the consumption play. Some other stocks, IT, there is cross-currency tailwinds that will come in. Organic growth will be good this time around. They don't see any. There will be slight pressure on the margins because Q3 is seasonally weak quarter for them, and no guidance change is expected this time around. So that's IT. The other is oil and gas. A sharp fall in crude prices will impact businesses, some of the oil marketing companies. Lower gross refining margins and inventory losses will come in for the oil marketing company. The other track factors that you need to watch out is a metal. Base effect will come in for both the ferrous and the non-ferrous. There's correction in base metal prices, and China slowdown is something that will impact. So it will be a weak quarter for metals this time around. Pharmaceuticals, again, competition and pricing in the US will definitely be there, and high base due to GST restocking again will come in as it was in the second quarter. So probably it will be a weak quarter. And finally, telecom, continued ARPU down trading is something that we are seeing, and exits to hurt tower companies. Again, there is a significant amount of competition. So telecom companies, probably it will be a weak quarter this time.